This is Matthew Kratter from Trader University, and today I want to answer the question, why can't we just forgive all the debt? And as part of this, I'm going to be talking about debt jubilees. Also, be sure to stay tuned until the end of this video for an update on the Fed's emergency meeting yesterday and what I think is going on there. So this video was inspired by JD. He said, "Hey Matt, is a debt jubilee a way out for the global economy? Say eliminate half of all the debt. The Jewish community does this periodically. I understand." So this is a big problem we've been talking about on this channel. The US government, the US federal government has too much debt, and this causes all these problems because the US is also the issuer of the global reserve currency, and these treasuries, this debt, is actually the global reserve asset. It's the main place where countries store their trade surpluses. And when you look at debt as a percentage of GDP, we can see how high it has gotten over the past few years, especially in the wake of the pandemic response. So for the 2010s, it was around 100%, which is pretty bad, but now it's gone up to 120%. This is debt as a percentage of GDP. And this is important because it's the real economy, it's GDP, that's used to pay off this debt, theoretically, and to service this debt. This idea of a debt jubilee goes back to the book of Leviticus. And what happened, or what used to happen, was that every 49 years roughly, and there's a debate whether it's 49 or 50 years, but you had this symbolic number of 7 times 7. They called it 7 Sabbaths. The land would return to its old owners. Slaves and prisoners would be set free. Debts would be forgiven. And this is where that idea of the debt jubilee comes from. So let's think about how this would work in modern day America. Let's say that grandpa, who's 75 or 80 or something like this, has 90% of his retirement money, his individual retirement account, his IRA, in US Treasuries, which are these US government bonds, as we said. Let's say he has $200,000 there. He has another $100,000 in a very conservative pension plan from his old company, back when companies still provided pension plans. And this money is also mostly in Treasuries. So he has about most of his net worth in US Treasuries, in US government debt. Let's say he worked 50, 55 years to accumulate this money. Of course, it was earned honestly. He spent a lot of time away from his family to earn it. He had to sit in traffic, etc. But that's okay. Everyone needs to work. This sort of allocation to really conservative bonds, it makes sense if you're going to need the money in the next 1 to 5 years. So it makes sense why this grandfather would be especially concentrated in US Treasuries. US Treasuries can move around a lot, especially as they have this year, but you know if you hold them to maturity, you get the full principal back. At least that's what the expectation is. Whereas if you had this money in stocks or Bitcoin, it might not make sense at the age of 75 or 80. So he has this concentrated position in US Treasuries. But remember, there's too much debt in the system. As we've been saying, the US government owes too much debt relative to the size of the real economy, which is used to service this debt in the form of paying taxes that's then used to pay interest income on the debt. So let's say we follow this idea of doing a debt jubilee. And I'm not saying it was a bad idea in ancient times. I'm just trying to work through what it would happen if we did it today, especially in the US. So let's say the US government is just going to cancel 50% of the debt that it owes. In modern terms, this would be called a default, and it would be quite serious, as we're going to see. So let's say the US government decides to cancel 50% of this $31 trillion worth of debt that it has. So if you happen to own any of that debt that was canceled, you're not getting your original money back, and you will also stop receiving interest payments. So here's the problem with debt jubilees. One person or one government's liability is another person or government's asset. The US government borrows money by issuing these US Treasuries. Grandpa and his pension plan bought some of these US Treasuries. These government bonds, they're a liability of the US federal government. In other words, the government owes people money. But these same government bonds are an asset on Grandpa's balance sheet. Remember, Grandpa is owed the money, and this is his money that he worked for, and he needs now to pay for health care and housing and food. He worked 55 years to accumulate this money. He sacrificed his time, probably a little bit of his health as well. And so if you cancel those bonds, it's debt forgiveness for the US government, but it's actually theft from Grandpa if you think about it, because those bonds are his asset. Here's another way to think about it. If you owe me money and it's the year of the biblical Jubilee and we're in ancient Israel, it's great if I forgive you your debts. This is a great way of smoothing out wealth inequality and ensuring that children and grandchildren don't inherit their ancestors' debt burden, particularly in ancient times when debt was transferable from father to son, and back when people still went to jail, for example, for having debt. So that's one thing, if I forgive you the debt that you owe me. But what if you owe not me money, but you owe Bob some money? Is it really up to me to forgive that debt and tell you that you don't really need to pay Bob back? That's a little bit weird. And so in this case, shouldn't I involve Bob in the conversation because you owe him the money? So if you cancel those US Treasuries, if you cancel US government debt or any sort of debt, any sort of sovereign debt around the world, you have a lot of old people holding this money, you have a lot of retirees holding it. These people are going to be out on the street unless a family member or charity or government program or church or synagogue or mosque makes up for his lost net worth and cash flow. So now what you've done is you've created a whole group of impoverished people who had certain expectations going into retirement. They're very old now. Grandpa's too old to get a new job at 75 or 80. Maybe his health is beginning to fail. And so what you have is you're going to have a whole group of impoverished people that the government is probably still going to end up needing to support unless it wants a social crisis. And at minimum, these politicians who cancel this debt are going to get voted out by the retirees. So the government is probably going to end up having to take on more debt anyway, just to support these old people who've been impoverished by the debt jubilee. This is the problem. The government's probably going to need to take on debt to help these people, but who's going to want to buy that debt now, especially if they know that it can be canceled or forgiven at any time? The moral of the story: in practice, developed nations will do anything that they can to prevent their government debt from going bad. And the only real playbook is to have the central bank step in and print money and buy the bonds. You could confiscate 100% of the wealth of all the billionaires in that country. It still would only buy you 6 or 12 months worth of time. So this is why the Bank of England moved and reversed itself and stopped selling bonds and instead started buying bonds to try to stabilize the pound and to try to stabilize the government bond market, which is called the gilt market, GILT. So now what about the Fed's emergency meeting yesterday? Well, a lot of people are laughing because they made an announcement that the matters considered were the Board of Governors decided to discuss the discount rates to be charged on debit cards. And what a lot of people missed from this was that, and here's, for example, John saying, lol, the emergency meeting was about debit cards. And in fact, they did make an announcement that they were updating their rules concerning debit card transactions. But what a lot of people missed from my original video is that this meeting was conducted under what's called the Sunshine Act, which is done when they don't want to release everything that was discussed, especially if it would have an effect on financial markets. And so this was not the most important thing that they talked about, talking about debit card transactions. They were talking about systemic risk, and this is the whole reason that they had the meeting. And if everything had just been out in the open, they would not have had to hide under the Sunshine Act. And it's very interesting what happened in the wake of this meeting. We had a huge move up in the precious metals, huge move up in silver in particular, big move up in gold, S&P up 2.5%, NASDAQ up over 2%, Dow up 700 points, crude oil up 5%, gold spiking along with silver, Bitcoin up about 2%. Was it something that the Fed did or said in that meeting? Because this rally is not about new debit card rules. Is it just the beginning of monthly inflows? Could be just another bear market fake rally as well. But I think something significant was discussed, and this has been leaked to people closer to the Fed and Wall Street, and that may explain why we're having this huge rally. Now, only time will tell. Midterms are just a few weeks away, so perhaps Powell and the central bankers are giving the incumbent politicians some breathing room. It's always very hard to tell, but as I'm recording this Tuesday morning, the NASDAQ futures are up 2%. The S&P is up 1.7%, gold spiking, crude oil is spiking, and Bitcoin is up as well to almost 20,000. So this suggests, it may just be a coincidence, this suggests that something may have been decided in that Fed emergency meeting. I look forward to the day when we don't have closed-door meetings where we have no idea what's going on by people who control the money printer. This is a very unfair and stupid way to run things, and this will be eliminated under a Bitcoin standard because a monetary policy will be very transparent and out in the open. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for listening. and I'll see you in the next video.